Torrid Holdings CURV Institutional Due Diligence Report. Disclaimer. This analysis is generated by an AI language model based on its pre-existing knowledge base, which has a cutoff date. It does not have access to real-time market data, live news feeds, or current SEC filings post its last update. The information herein is for educational and informational purposes only and must not be construed as investment advice. You must verify all critical data, including current stock prices, recent SEC filings, 10Q, 10K, 8K, earnings call transcripts, and real-time news using reputable financial data platforms, for example, Bloomberg, Reuters, Yahoo Finance, your brokerage, before making any investment decision. 1. Executive Summary and Investment Recommendation. Company Snapshot. Torrid Holdings CURV is a U.S.-centric direct-to-consumer apparel retailer targeting plus-size women's sizes approximately 10 to 30. Sales channel mix includes stores and a growing e-commerce business. The company has been actively resizing its physical footprint and focusing on digital. Investment thesis. Bull case. Strong brand in an underserved plus-size market, accelerating e-commerce mix. Store rationalization should lower fixed costs. Recent quarters show operating discipline and modest positive free cash flow. EBITDA, restoring optionality. Bear case. Fragile top line with multi-year revenue decline, negative or marginal equity position, thin margins, and weak liquidity. Retail cyclicality and intense competition could force dilutive financing or restructuring. Final recommendation, 12-month outlook rating, hold speculative. Rationale. The market already prices a distressed retail story low, PS depressed share price. Upside requires sustained revenue stabilization and balance sheet repair. If management demonstrates 2 consecutive quarters of stabilized YoY sales growth and margin expansion, rating could be upgraded to buy. If revenue and cash flow deteriorate further or significant equity dilution is required, rating moves to sell. Current price context last known. Recent trading range, $1.80 to $2.40 early September 2025. 52-week range, $1.62, $7.25. Market cap significantly compressed. Verify live quote before any decision. 2. Business and corporate overview. Business model. Revenue sources. Retail store sales and e-commerce. Apparel, intimates, accessories, footwear, beauty. Stores serve brand discovery. E-commerce drives repeat sales and reduces per unit acquisition costs. Digital now accounts for approximately 60% plus of sales. Key segments. Geographies primarily U.S.-based operations. No material international exposure. Torrid reports a single operating segment under GAAP. Market positioning in TAM. Industry. Specialty apparel retailer. Consumer discretionary. TAM plus-size women's apparel is a structurally underserved subset of the U.S. market. Torrid enjoys brand recognition and loyalty within its niche but modest overall market share. Management and governance. CEO, CFO. Management is focused on store rationalization and digital expansion. Execution risk is material, as store closures must preserve brand equity. Board, mix of retail and consumer veterans. Independence and turnover should be verified in the proxy. Compensation is a standard blend of salary, bonus, and equity incentives. 3. Fundamental financial analysis, U.S. GAAP focus. Income statement trends 3 to 5 years. Revenue, peaked, FY 2022 $1.29 billion, then declined. FY 2002 for $1.15 billion, FY 2025 EST $1.10 billion. Margins. Gross margin mid-30s. Operating margin thin, low single digits. Adjusted EBITDA $80 to 90 meters guidance. Net income near break-even. EPS. Volatile. Small positive EPS. In FY 2025 quarters. Fiscal year revenue $M. Gross margin, operating margin, net income MEPS GAAP. FY 2002 to approximately 1,297 to 41% mid-single digits. Negative FY 2023 approximately 128,836%, approximately 8% AGH, positive. Y 202 for approximately 1,152, approximately 35%, approximately 5% small positive. FY2025 TTM, approximately 1,136 to 38%, approximately 4 to 6% small positive tilde. Since balance sheet strength latest available current ratio, approximately 0.8 to 0.9 liquidity stress. Quick ratio, weak once inventory is excluded. Debt equity, negative equity reported, leverage risk high, interest coverage. Marginal, dependent on stable EBITDA. Efficiency inventory turnover, managed through markdowns and assortment adjustments. Receivables, minimal retail model. Cash flow, operating cash flow. Mixed, modestly positive in recent quarters. Free cash flow, positive but limited. CapEx, tilde, $10 to 15 meters. Financing debt repayments and potential future equity raises. 4. Key ratio benchmarking versus peers and index. Metric Torrid curve. American Eagle, AEO, Chico's FOSS, CHS, SPDR, Retail ETF, XRT. Market cap, very small multi-BN. Small mid-cap aggregate PETTM. Approximately 50 to 60 times, approximately 18 variable, approximately 16.5 forward P. E approximately 28 times, approximately 20 variable NAE. EV approximately 8 to 9 times, approximately 7 to 10 variable, 8 to 12 times. Median. Price sales 0.15 to 0.2 times, 0.6 to 1.0 times, 0.1 to 0.4 times, approximately 0.5 PBNA neg E. E. Q. Approximately 2 times 0.5 to 1 times, approximately 2 rho NA neg. EQ. Mid-single digits variable sector AVH dividend yield 0% NA valuation commentary. Torrid trades at distressed multiples. Low PS and EV, EBITDA, negative equity. Market assumes little growth and high execution risk. 5. Industry and competitive analysis. Porter's 5 forces rivalry. High specialty retailers, department stores, e-commerce competition. New entrants, moderate e-commerce lowers barriers, suppliers, low, moderate fragmented supply base. Buyers, high, low switching costs, price sensitivity, substitutes, high inclusive size, ranges from larger brands. SWOT analysis, strengths, weaknesses, recognized plus-size brand, weak balance sheet, negative equity, growing e-commerce mix, low liquidity, and thin margins. Loyal customer base, high operating leverage, opportunities, threats, digital growth and loyalty, consumer downturn, inflation. International expansion, competition from inclusive brands, product adjacencies, capital raise, and dilution risk. 6. Risk assessment, systematic risks, macro weakness, discretionary spending sensitive to wages and jobs. Interest rate risk, high given debt profile, market sentiment, small cap volatility. Unsystematic risks, balance sheet stress, equity deficits, and liquidity constraints. Execution, store closures must preserve brand value. Competition, encroachment by larger brands. Supply chain, markdown pressure from mismanagement. Catalyst to monitor next quarterly earnings, Q3 FY 2025. Store closure program progress. Credit facility amendments or waivers. 7. Recent market news and sentiment. Q2 FY 2025 results. Net sales $262 to 266 meters. Adjusted EBITDA guidance raised to $80 to 90 meters. Announced up to 180 store closures. Market reaction, shares volatile, low absolute levels. Sentiment, cautious to negative. Valuation reflects distressed outlook. 8. Final verdict and conclusion, supporting points bull. Strong brand leadership in niche plus-size market. E-commerce transition can structurally improve margins. Store rationalization may reduce cost base. Key risks bear. Negative equity and liquidity constraints. Ongoing revenue declines and weak margins. Execution risk in closures and digital pivot. Final recommendation, HOLD. Speculative. The equity reflects a turnaround bet. Upside requires sustained revenue stabilization, margin improvement, and liquidity repair. Without these, downside risks remain elevated. Next steps for institutional investors: review latest 10Q 8K for liquidity and debt covenants. Build scenario model base, upside, downside. Conduct channel checks, store and digital. Evaluate peer comps, EEO, XRT, for consumer demand signals.